All right, guys, let's get started. Good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time. Today is Wednesday, November 23rd, 2022. It's Mickey Blindside here with your market memo. Today is the eve of Thanksgiving. Tomorrow is Thanksgiving, so markets will be closed. So for those of you in the United States, I hope you guys have a wonderful Thanksgiving. Again, the markets will be closed on Thursday. Friday is a half day. It closes at 1 p.m. Eastern Time. So remember that, guys, in your trade plans as you build your positions or manage your positions accordingly. Okay, so today markets are going up. We did have, I believe we had some jobless claim numbers coming out. There was more jobless claims, and we saw a little bit of a pop in the market. I think there's a lot of volume is gone in the market just because, it's Thanksgiving week. A lot of professionals take the whole week off. And so we saw volumes have been quite low since last Friday. So, outside of U.S. indices, though, the currency markets, the commodities markets, they are still in full trading mode. The rest of the world doesn't have a holiday. So the commodities and currency markets are acting a little bit more normal, whereas with the U.S. indices around this time, it's very normal to see just drift, okay? Just a little bit of drift. I do expect, though, that we will probably see bigger swings starting next week as we get closer and closer to the December options expiration. My plans still haven't changed. We're still marching forward. When we were at 3,600, a lot of people laughed at me saying that, when I said, I'm going to short at 4,100, 4,125 zone, a lot of people laughed at me at 3,600. They said, it will never go back there. Well, never only lasted about 6 weeks. So, retail went record short here. If you took your trading advice from Twitter, you would have shorted here with puts, depending on, what kind of puts you got. Some stocks still kept selling off, but the indices did not. And so you're in a world of pain right now if you just kept shorting the market blindly. One of the things that has really helped me and helped a lot of our members has been the junk bonds ADL, the junk bonds advanced decline line, okay? And there's a reason why I go over that every single day, guys, okay? I don't do it just because it's nothing, There's a reason for that. This junk bonds ADL line, we saw 4 days in a row of advances on October 26th, okay? On October 26th. So by October 26th, it was right around here. This was the 4th day in a row of advances over declines, okay? And so every time it dipped, it has been a major buying opportunity, at least on the short term if you're a day trader, that is. Buying the dip after that is it works, okay? And the reason why is because as liquidity improves, floors and put walls are stronger, okay? And the market reacts to them by bouncing from there. And then resistances and call walls just don't mean as much. They're just not as strong when liquidity is improving. Of course, the opposite is true. When liquidity is declining, those put walls and those floors are a lot weaker, and we can bust through those, all right? But liquidity has been improving since the end of October, gradually at first. And then, now we're seeing the junk bonds ADL line really moving up. And so the theory behind this is that, the junk bonds market, first of all, is a much bigger market than the stock market. And it is the riskiest part of the bond market. So whenever we start seeing risk appetite in the riskiest part of the riskiest part of the bond market in general, we start seeing risk on in other asset classes as well. All right. The bonds market is way larger than the stock market. Okay. It's not even close. Like the scale is not even close. Okay, so you usually start seeing things in the currency and the bond markets first, and one of the great ways we could use that is a junk bonds ADL. So it had advances over declines. We're still moving up. I think, yeah, in the last what is it, 1 2 3 4 5 6 7 8 9, so in the last 9 days we've only had one declining day, and the rest have been positive. Okay, so liquidity is improving. All right, it still, though, is away from the local highs here from June and August. All right, so until we actually go up above that, this is just going to be any other bear market rally. Okay, I do expect that at some point this will run out of steam, but when is that going to be? It's hard to say. Okay, it's hard to say, but on a risk reward basis, 4,100 to 4,125, that is a great risk to reward zone to short the market if one is inclined to short. This way, if we're wrong, we can just, get out of the trade with a very small loss. All right. We know when we're wrong. We know when we're wrong relatively quickly. Okay. And we can get out with a small loss. So that's why I want to, especially in this lower liquidity environment, this is the reason why I want to be patient. All right, let's just take a look at some of our other liquidity datas as well. The high-low line is still going up. Okay, it's above our first moving average. It is attempting to now meet the second moving average. So the moving averages are 29 and 4 exponential moving averages. If the New York high-low line, so that's the 52-week, the issues in the New York Stock Exchange making 52-week highs versus the stocks in the New York Stock Exchange making 52-week lows. So if that is positive and starts going up above all those moving averages, generally that's the first signs that the bear market is starting to end. Okay, we haven't had that signal yet all year, and we are not seeing that signal now, not yet. Okay, but it is stabilizing. Liquidity is improving, though. All right, we've had moments before where it went over 2 moving averages. We saw that in the summer. We also saw that early in the spring as well too, but it couldn't quite get above all 3. All right, so I expect probably the same. If this bear market continues, it'll probably go above this 1 or 2 moving averages, and it'll probably come back down again. If that's the case, that's a very clear sign that the bear market is continuing, at least for the short term. New York advanced decline line. This is the advanced decline line for the New York Stock Exchange. It is going up. Breadth is improving. If you look at the S&P 500 equal weighted index, we are going up, and we made a higher low. We're attempting to make a higher high in the equal weighted S&P 500. That means a lot of the stocks are participating in this rally, okay, which is a good sign. It's a good sign of overall market health, at least in the short term. All right, so my plans haven't changed. Okay, I'm just still remaining very patient. One thing I know a lot of people are talking about this is Cathie Wood is buying more coin, and she thinks Coinbase, and she thinks Bitcoin is going to be $1 million by 2030. I mean, okay, that sounds a little crazy. Usually, on social media or some of these these hyped up people, these meme stock investors or whatever, they tend to be either overly bullish or overly bearish. Just give me 1 second, guys. Sorry about that. I had another one of my computers in the background, and it started playing some ads. But anyway, so yeah, it tends to be that these, the social media and everybody tends to be extremely bullish or extremely bearish. And I find that usually both of them are wrong. I actually wanted to take a look at crypto right now. If you look at the options market in Ethereum, the open interest is still going down. Okay, it's at 5.3 billion. It was at around 7 billion or so, but now it's around 5.3. And so it's got the options market's got a little bit less pull and less. It affects the spot price less. just because there's less participation. So until we see more participation in the options market, I won't be monitoring that. I'm just monitoring the open interest. And once the open interest picks up to about $6.5–7 billion again, then we can monitor that and see if we can get some clues as to where Ethereum and Bitcoin may tend to go. But until then, we'll just rely on the charts. But right now, I wanted to share something with you guys on Bitcoin, the Bitcoin chart. So I started just playing around with the Bitcoin chart. I started, playing around with the log chart. And the reason why we would, one would want to use the log chart is to see the more percentage-based gains rather than the actual nominal gains. And usually this is a little bit more useful for something that has moved a lot. Okay, and you want to take a very long-term view of something that has really moved a lot, from a very low value to a very high value, and so it's a lot. And this way, you can actually view the percentage changes rather than the nominal. If you use the regular chart, as you can see, it kind of is crazy because it went from here, like for example, 10,000 to 60,000, right? Which is a 50,000 point difference, but it's it's a 500% profit. Whereas here, it went from 1,000 to 16,000. All right, which is 16 times movement, 16x movement, but it's only it's only a 16 or 20,000 point move. So in comparison, because of the nominal change, it actually looks smaller. But if we change it to percentage based or logarithmic, as you can see, the percentage changes was a lot greater here than it was when it went from 10,000 to 60,000, for example. Okay, so this way it kind of gives you the rate of change within the price when you use a log scale. But anyway, I was playing with this log scale, all right, and what I noticed, all right, and it looks like TradingView actually got rid of my lines. Actually, you know what? Let's go ahead and build this chart together. One of the charts I was looking at was from this 2011 uptrend, or the 2011 upthrust to the 2020 lows. And the way I build charts, and I actually don't eyeball it, I actually input the coordinates myself, and I think this is a very good practice. It allows you to get a little bit more precision. So the low here is 408,785. 408,785. I had already this prepared ahead of time, but for some reason TradingView does that. They sometimes delete your charts. I don't know why it does that every once in a while. And here the closing price was 1487. 1487. All right. And if you actually chart it in Japanese yen, the Bitcoin in Japanese yen, and there's a lot of volume in spot Bitcoin actually in Asia, in South Korea and in Japan, it actually looks like, this trend here, it broke down and is trying to regain it, almost like a false breakdown. Okay. However, if you were to price this in US dollars, you get a completely different chart. And actually, let's build this out together as well too. Here to here. All right. And the low here is 3880.59. 3880.59. And then also here too. This is the closing price was 1855. 1855. All right. Okay, and so if we look at that chart, it looks completely different, right? And a lot of that actually has to do with the volatility in the dollar. All right, and so it's something that I noticed, okay? Something that I noticed. I have to study this a little bit more, but I thought I would share this with you guys. I know some of you guys are really into TA, technical analysis. So if some of you guys have some insights you want to share with us after you chart this out yourselves, by all means, come by the Discord, let us know, okay? But this would appear as if this actually broke down and, this and that's a clear breakdown. If we look at it on a monthly basis, I mean, I guess by the end of the month, sometime next week, if it goes up again, that would be quite a candle wick. That would be quite a reversal on a monthly basis, and we could go forward. Now, this is probably, recovering all of this, that might be very difficult. All right. However, again, we see a lot of volume in Bitcoin trading in countries like South Korea and Japan. And again, if we price it in their currency, it actually doesn't look so bad. Okay, it actually is trying to recover that line as we speak. So we'll see which chart is more clean in the end. But this is something that I'm observing right now. And if I see that this actually goes up and closes above this and retests this line and bounces above that, that would probably be a good bottoming signal for Bitcoin, at least on the short term. Okay. That's the conclusion so far. And again, we would need a couple of weeks to confirm that. All right. I would want this to close above, back test it, and then bounce strongly from there. And then we would know that, hey, there's something to this Bitcoin priced in Japanese yen. Something that I noticed, okay, on the ETH chart is not as clear. That relationship is just not as clear on the other currencies. ETH, when I drew it out, it looked like ETH had a lot more to go on the downside. But, we'll see. We'll see if that holds up or not, okay? But that relationship is something that I saw in Bitcoin, all right? I thought I'd just share that with you guys. What else is in the news? Energy's in the news as well, too. Apparently, there was some news that came out about Russian oil. Not really sure what I try to look for it myself. We got to be careful now what news we listen to because, with the whole Wall Street Journal fiasco that happened a couple days ago that sent oil prices down on a rumor that they would increase production to make up for lost Russian production. That turned out to be just a rumor and it's false. So we got to be careful what we listen to, and that's why I tend not to listen to the news, but we are breaking down. Now, this is kind of normal around Thanksgiving. Around Thanksgiving, we tend to see big moves in commodities and in currencies, actually. So last year, we had this huge candle around Thanksgiving. It's not exactly on Thanksgiving. Sometimes it happens a little bit before, like a day or two before. Sometimes it happens like a day or two afterwards, but we tend to see these big moves around Thanksgiving, all right, in commodities and in currencies. So I wouldn't be surprised if that's what happens here, okay? We see some big moves back and forth. So, if you guys are swinging positions over Thanksgiving holidays and the Thanksgiving weekend, it may not be a bad idea to keep your positions very small and keep your positions defined risk, meaning exactly what your worst loss is going to be. A outright futures contract position is not defined risk. You could lose potentially unlimited, right? Let's say you're long the oil futures contract. If it goes down, if it keeps going down, it's your how much at risk is not defined unless you have a stop loss, right? So I would definitely keep the positions defined risk. Rather than using a futures contract, you may want to use some spreads. You could use if you're futures account enabled, you can always use the futures options, or you could use an ETF like USO. I prefer the options, the futures options, but I know some of you guys don't have futures enabled accounts. You can use USO. It's not a bad ETF to track, at least for short-term swing positions. It's not a bad one to use. Options market is pretty liquid as well too. So that's a decent alternative. All right. So just be careful. All right. Big moves are expected. Natural gas. Look at that. 9% up today. That is crazy. We are on an uptrend now again in natural gas. This is something that we've been kind of anticipating. I told you guys, back in the last commodities boom, we saw something similar to this. All right. And it took a couple of years to play out. And this is one of our thesis on, this is one of our points on the thesis for FLNG, which is up today too, which is the natural gas tankers. But as natural gas gets more and more expensive, you know, the rates to ship those are also going to get more expensive as well too. That's part of the thesis. But yes, we are getting into the winter months. It's been kind of brutal here in the United States, especially in the East Coast. We've had, you know, some record snowfall in certain places. That may be driving up some of the Henry Hub natural gas prices. We're also seeing the European prices going up as well too. All right. It looks like the European prices bottomed out. Could this go higher? Oh, that would bring some bad news for Europe. Okay, if this went up if the European natural gas prices start going up again too on a weekly basis, we could see the euro getting pressured. We could see, you know, the Euro Stocks index also getting pressured as well too. Okay, I do still have that FEZ position, just so you guys know that I'm not BSing you. I still have it. You know, I announced this in the Discord. We are a little bit underwater on this, but we'll see what happens. I still got the 36-31 debit put spread. We will see what happens to that. I still have until February. I got about 90 days still left in it. Hopefully this goes back down. I do think next week we might see a little bit of a pullback after this drift is over. That if there's a pullback, it's going to start sometime next week. Okay, if it is to happen, it may not even happen. So if that's the case, if by next week it doesn't happen, I'll just exit. I'll just take my loss and just just exit out of that. Okay, so that's my plan for FEZ. All right. Speaking of natural gas, I mean, we were just talking about natural gas. Oh wow, look at that! It's coming up. Look at that. So yeah, it looks like this 31 area was the buy level. I was trying to wait till 30. All right. Sometimes patience pays. Sometimes, a lot of times you miss out. It is what it is. It's part of my risk management to look for, these types of deals. But, if this does not come, if this doesn't get to 30 soon, I may have to increase, or I may have to raise my buy level. I may even start buying around here, like this 32, 33 zone, if it comes down again. Okay, because it does look like it's making that higher high, higher low kind of a trend. And I really don't want to miss out on this. I do think there's a lot more to run on this. If you look at some of the other tankers like FRO or STNG, some of them had really high stock prices during the last commodities boom. And so I do think the shipping rates are going to go up, and a lot of these tankers are going to profit off of that. STNG is another one. This one is on an uptrend. I mean, this could go up too. This has gone up a lot, but I do expect all of these, there's still a lot more room. And I think this commodity story is probably going to be around for at least like 3 to 5 years. My plan is on FLNG is to get into some longer dated calls that are in the money and, keep selling covered calls against them, which is, like a poor man's covered call. So that's still my plan on this. I may raise my buying level to about 30, let's say around 33 or so. We'll see if it gets there. If it gets there and it looks good, I may enter the call then. Okay. And I'll let you guys know, of course, on Discord. All right. So that's what I'm seeing right now. Let's take a look at some of our other names. I'm still in UUUU or Quad U. I drew some channels on this. I'm not sure if these channels are, valid yet. We'll see what happens in the coming weeks. It does look pretty compelling though, doesn't it? And I may even start selling some covered calls again here. Right now, they're not covered. I got rid of my covered calls on this. I told you guys this in the Discord last week, or maybe earlier this week or something like that. It was earlier on. I always announce my trades on Discord. But yeah, I don't have any more covered calls. I got out at a little bit under 15 cents a piece for the 8 covered calls. Yep, a little bit under 15. So we're still around there. Okay. We're still in the same spot. So, we'll see. I do think that, as time progresses, if the dollar drops, metals could really start running. All right. Speaking of metals, what's going on with PLG? PLG is also another name that I've been trying to accumulate. I'm still waiting for that 141 zone. If the Australian dollar can play nice, maybe we get that opportunity. However, it does look like the Australian dollar is reversing from losses earlier in the session. The weekly chart, this was a nasty week. This looked pretty bearish to me, but now this looks pretty bullish if this keeps for the week. So, you know, this might just be like a little bit of a pause before another leg higher in the Australian dollar. It could be. So if the Australian dollar, doesn't come down for the rest of the week, we could see these metal names go higher, which means I would probably be missing out on PLG, but we'll see. If PLG stays around here between 160, 165, and the Australian dollar closes at these levels or higher, in the green like this for the week, I may nibble on some shares on PLG at the end of the week. I might start an initial position, but I still want to wait for that big zone at 140, 141, 140 something or so, 140 and some change. I definitely want to wait for this. That's my main buy. But again, if we're in this 160, 165 zone and Australian dollar closes, in the positive for the week, on Friday, I may go and nibble on some shares. Okay. This, if it actually does this, if it actually, finishes up and we see a weekly uptrend go up, that could mean that, maybe we start seeing some positive news coming out of China. We are seeing an outside week up in ZTO, which is the Chinese industrial name that I want to get into. This is the equivalent of the FedEx in China. We are seeing some strength in some of the Chinese industrial names. However, I can definitely see if the Australian dollar reverses and goes back down and confirms last week's bearish candle, then we could see this pull back. And most of my buying, I really want to do it in the low 20 and some change, or a little bit, or a little bit less than 20, even in the 19s. Okay, that is the zone that I'm looking at right here, between looks like around in the 1990s to the 2010s. Okay. 19 and 90 cents and 20 and 10 cents. So somewhere around here, this is definitely where I want to go long on ZTO. That's my main buy, but we shall see. Okay. And again, this one too, I'm thinking about getting into longer dated calls. Right now, the Julys don't seem so bad. Okay. The Julys are the June 2003s. The January 2024s, the spreads are just a little bit wide. Although, no, the spreads are a little wide. I'd rather get into like the June or Julys. And that way I can get a little bit higher delta, all right, and spend a little bit less on premium for a higher delta, all right? And then I can still settle covered calls against it. That's my plan so far, okay? PPC, let's talk about food commodities. PPC is up. We're getting closer and closer to our covered call selling zone. Once it gets to around here, like the 28, 29 zone, I'm going to start selling covered calls that are in the 30s. All right, 30 strike covered calls a month or two out, and start collecting premium on this. All right, so my thesis on this still hasn't changed. I'm still very bullish on the price of chicken because I'm very bullish on the price of beef. Speaking of beef, let's look at feeder cattle. Feeder cattle is still at its highs. What about live cattle futures? Live cattle futures still going up, trying to attempt a higher high even. All right, so as beef prices go up, alternative protein prices go up too. That's chicken and pork. You can look through our past videos and see my thesis on food. We've been talking about this since June. I went over this again earlier in the week, also last week as well too. Another food name that I haven't really talked much about is VITL. I mean, I did mention it a couple of times, but for food, I've been more focused on PPC, Pilgrim's Pride. But VITL is one of those stocks. It's a newer stock. It was it didn't really consistently make money, but this quarter they did beat estimates, and it looks like that they can the road to consistent profitability seems near for VITL. Just looking at their earnings call and looking at their earnings report, they sell eggs, okay? So egg prices have been going up. It does look like from their earnings report that they are starting to see pricing power in their eggs as well too. And so, pricing power means higher margins, okay? And in this environment, you really want to be involved in names with higher margins and good cash flow. Right now, VITL is not one of those stocks. So this, I would say, out of all the food plays and out of all the plays that we're doing, this is the most speculative of all because it doesn't have that proven track record. I do think, though, that it has the potential to get that track record within about a year or two. Okay, so that would mean huge gains on this. As institutions probably get much more interested in a name like this, especially around the macro environment, if they can get their cash flow, if they can, generate free cash flow and raise that quarter over quarter. And if that's the case, we're going to see a lot of institutional bids come in this stock. I'd like to get in before that, of course, but it is speculative, so I'm going to keep this relatively small. So if we see, if I see that it gets into the 1250s or so, I want to nibble on VITL. Okay, small positions, but I do think it's going to be, it's going to pay. We could see the stock really soar as institutions buy into this. Okay, and again, it's got an options market on it, so I'll be selling covered calls on pops as well too. It's got a decent amount of volume. Well, not really. I thought it did. I must have been thinking about some other stocks. So it looks like the options market is a little bit thin. So I may have to go out just a little bit to be selling options, maybe 60, 90-day options, which is fine. I always like to collect premium on my holdings. So VITL, another one to keep on your watch list. All right. So that's mostly what I had for today. It's a quiet week, guys. It's a quiet week. A lot of pros are taking the time off. I noticed too in our Discord, a lot of people are taking time off and they're on holiday and such. We'll see. Okay, so I think a lot of people are going to come back. A lot of the pros are going to come back next week, ready to trade, and so we might be seeing those big swings later on. Any questions? Anything you guys want me to go over? Going once, going twice. All right, then, in that case, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord. Be a part of a growing community. There are no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right. Again, tomorrow's a holiday. We won't have a market memo. We'll be back again next week, Tuesday, Wednesday, Thursday, 30 minutes after the market opens, 10 a.m. Eastern time with the market memo again. I'll see you guys then. Trade safe. Have a wonderful Thanksgiving. Stuff up on as much turkey and a ham and pumpkin pie as you can. And come back refreshed for another trading week next week. Hope you guys have a great day.